Hi everyone. Today is Thursday, April the 3rd. We had the tariff business yesterday, and now we begin a brand new day. I am going to start snapshotting our morning setups simply because they do look very good towards the end of the day. We've had some really good markers. If you just went in and then sold at the profit zone and just left and had you one trade a day, you'd be in really great shape. So let's talk about what's going on. The one picture I want to show you is the following. This is why I suspect that the market could be very sideways today or very wicky, but still in a range. Have a look at where we sit. So last month we had a low, and in the overnight, certainly, of course, this is a cash settlement, so it's not going to start printing until the day is open. But this is a very strong support area, holding a moving average that we bounced off of the last time we were there in 2023. It's been a bit. And then August 2024. I think this is probably the carry trade unwind for Japan, possibly, or something foreign, international like that. So we've got some traders that are probably going to try and buy the dip around here. So steep dips, still buy zones. We're going to have some folks that are shopping value, but here's something very interesting. Hedge funds continue to de-risk, and they carry a lot of money with them, right? So we are watching pullbacks that make for some areas that might bring other buyers into the mix. Okay, and so we're sitting right around that area, 55.21. I do believe that that's an important zone. Here's what we're looking at on the day, right? Hourly formations. Listen, could you go short here? Of course you could. This is the top of the range. So if you had a double bounce and it bounced to the top of the opening tick, or it bounced into the low of the aftermarket drawdown, and you decided to take a short, your risk would be very small in general, right? And when it loses that zone, you can add to your position, but your targets are going to be the stair steps. One, 55.21. The next one would be 54.98. The next one would be 54.81. At which point you would say, I probably ought to take some profit. Okay? If we bounce off 55.10 and we resume trading above 55.21, we know we're back in this area of value that's been building. If we break it, remember, bottom of the box is pretty likely. Let's see, just for grins, if I make this the actual measured move event. Yeah, I mean, we're looking at 54.81 to 54.60, right? Oh, for heaven's sakes. What is... All right, there we go. So that's what we're staring down. I only put it in terms of longs because I don't want to gum up the place, right? Trend is down. Momentum is down. It's dragging the bottom, so bounces should be sell zones. This is where the top of the bounce should be. Implied volatility moves stretching just a wee bit. So just like yesterday, if we get up over the top of our ranges and we move into the implied volatility move and it doesn't immediately reject, it's going to bring buyers into the market as traders try to hedge their short option positions. Okay? My thought is probably not going to get there. Potentially quite possible that we get down to 54.61. All right, here we have the NQ. All of these folks are sitting at these monthly support levels. Here is the high of the Globex opening candlestick. We are below it. Here is the range of the price action in general, but this entire area could easily be the inventory zone that we need to watch. My thought is if we're inside of the high, then we should get to the close, which we are right there. We just tested it. As long as we don't break the high, it's still a short into 18,800. That was a measured move from times past, 18,880. And the pullback, just wait for it to come here. If it only has a wick down to half the space, you cut your risk by a fair tidy amount. The measured move below is 657, and the measured move above is 19,414. I think we sit inside of that range today, more than likely. All right, here we go. We know the measured moves for these guys very wide, right? It's 40,000 and then 38,000 and then 45,000 if we're looking at the other side of the formation. What does this look like? Well, right now, it looks like it's trying to build a buy zone. So what do we do here? We have to wait for structure to tell us we're right. So what does that look like? Structure very easily looks like the following. And let me make this line a little thinner. Right? So here is this line in the sand. It is old support, new resistance. For us to really hold off these lows, we need to bounce into resistance. Patience, friends, that could move all the way to here. The first pass into 41,421 should initiate selling again. Why? We're very low on momentum, very steep moving average underneath the VWAP. That being said, it's also a reflexive zone. So opening tick formations could just shove us out to the gate if folks think that this is a real buy zone. I don't think they're going to think that. It's going to stall out probably around this old Globex open, 41,500, or potentially 41,700. Here's the thing. I would love to see it flush through this area and then recapture it. That's going to give me the prettiest long. Right now, every bounce is a short. This has to absolutely confirm as support before you take the trade. It's very, very important. Let's take a look at, micro Bitcoin. What are we staring down? Look at the size of this opening candlestick. It's almost $3,000 wide. That's pretty big, okay? Where is the buy zone going to be? Well, it's going to be at the bottom of the range, right? Price action's lifting. Here's a new support zone. So you might say, well, Anne-Marie, can't I take it at the dip here because I am sitting in another compression zone, but I'm above my VWAP? Absolutely you can. What's your risk? Well, luckily, your risk is only going to be about $300. If you've got a micro, not bad at all. Then what do? You go to the top of the box. That's 84,000. At that point, folks, you've got to take your profits where you see them instead of holding out for some gigantic motion, right? I would watch for a reflexive breakdown that moves back above. Implied volatility is not that big here. It truly is not. 82,000 as support. If it breaks the level, get out of the way and watch for it to recapture, right? If per happenstance we get to the top of this candlestick, right? The measured move says it's about 85,000. We have the top of it at 85,150. Anywhere around there, that's going to be a potential sell zone. I also see this area just before that measured move event at 84,830. That's the likely range we are sitting in, right? We're sitting in a range box. And it could be that we don't get past the pre-market high and stay there at all, right? So shorting action anywhere between the high of pre-market and 84,500 down into the lines below, or we wait for it to give us one of these things, gigantic wick to the downside, and then a bounce up into the region that holds. All right, trade both sides. Let's take a look at oil. Oil also entering a buy zone, right? From this base. Look at where the opening range is. That is crazy, right? Let's look at this monthly chart for a hot minute. You can see we're breaking down under the 200. We've been under an upward sloping 50. That's very important. Downward sloping, tight moving average. Where are we headed to? Easily the bottom of the range. It could be 66. It could be 62. So, all right, Emery, you're looking at downside pressure. Well, how do you want to frame that out? Well, the first thing to notice is that we have an area of congestion right around here that breaks into a lower area of congestion. And I'm going to move that price mess to about 67.30, right? So we could be headed down there, old resistance, new support, 67.40. It's where it is right now. Do you want to take that long right there? I say no. I say no. Why? Because it's going straight down. And what you need to do is watch for a shift in market structure. What does that look like? I stop making new lows. I bounce into resistance. I pull back and hold a higher low. There's nothing like that going on here, right? Look at it here. I stop making lows. I bounce into resistance. I pull back and hold a higher low. I also get on top of my moving averages. Here, let's say that's my support, and I expect the bounce. Notice what it doesn't do. It doesn't hold the low. So you know that the long is not active. Right here, this is shorting action at the loss of our 68.60, and it is in continuation down. The measured move says it's about 67. And if we lose 67, easily we get to 66.18. Okay? That's what's happening. Now, all these instruments are financialized, so they are going to pull back because people have to make margin. This is very important to remember. It's not rolling over because, oh my goodness, I got to get out of here. It's rolling over because why they're saying they have to get out of there is, wow, I'm going to have myself a margin call this morning. Okay, let's take a look at gold. I have the entry here, rounding about 31.18. You do not buy on the way down. You buy on the way up after it's given you a reflexive shift in mechanical flow. For instance, here it is, big wick down, bounces, pulls back for a higher low, gets above our line in the sand. We can take the long here into what? Into frontline resistance. Now, you could hold it for a great big move here, but it doesn't come without a couple of tests. And notice how important this line of motion becomes. That's why we pay attention to these lines in the sand, why we look at implied volatility moves. So here it is. This is currently in a short. You know that I think that this chart needs to come back into maybe 29.20. I'd like to see it come back, way further than that. Let me see if I have it marked on one. Yeah, 28.12, 28.20, somewhere around there. I'd love to see that. Okay, right now, it's just going back into areas of prior congestion. So let's have a look and see what that is. Look at this. Here's inventory collection. So to me, coming down into the implied volatility, bouncing off of our stop level, which is this support zone right here, bouncing off of it gives us a price action long back into the top of the prior inventory accumulation space. Remember, as traders, markets move from inventory accumulation to distribution. Inventory accumulation, distribution. Inventory accumulation, distribution, moving back to inventory accumulation, distribution at a discount, back to inventory accumulation, distribution, base of inventory accumulation, distribution. That's all these traders are doing. And here is the flow down here at 3,100. If it loses it, get out of the way. But when it recovers it, it is very likely to go from the bottom of the range to the top of the range. Let's go to SPY. What are we staring down? All right, bounce zone. My suspicion is that this low wick is very likely the low of the day. They're going to be dip buyers because from a monthly perspective, this is a dip buying zone. Now, a lot of people saying, man, you're just flat out crazy for going long. They might be, right? But here's the thing. If you're picking a trade and a side, realize today is going to be very wicky, and you better wait until your risk is the smallest it can be before you enter a trade, or you're going to get caught in a very bad place. I was going to use some sort of terribly colorful euphemism. I decided it was not the appropriate thing to do. So, up a creek without a paddle. Okay, so here's the thing. What do we want to see? A bounce off of the zone. That's the low. Into resistance, pulls back and holds a higher low. Well, Amory, how do I know it's going to hold a higher low? You've got to let it get out of its little box here, right? This is a new inventory accumulation space. It's got a high at 546, a low at 544. Wait for it to bridge that space. Watch the shallow pullback. Accept the risk, which would be the bottom of this accumulation space, and then hedge yourself into target. Ultimately, if you're looking for the longer trade that holds a little bit longer, I would watch this whole area converge, see if it holds support off of the morning people saying, holy cow, I got to get out of here. I don't know what they're going to say. I'm going to be very much hands off today. I'm not doing anything crazy. But dips, because of the monthly charts, you're going to see buyers, right? And with hedge funds liquidating to manage risk, and that's what they're doing, folks. A lot of these hedge funds borrow lines of credit to put on very leveraged loans. And guess what? They're going to get a margin call. And so what do they have to do before that margin call comes? They're going to de-risk. And that's going to cause a little cascade. But the deep pockets are just sitting around going, well, let's see where these guys take it. And if it comes down into monthly support levels that have traction, guess what? They're going to nibble. And so that's what I'm thinking. Right now, this is shorting pressure because we are underneath the low of the opening candlestick formation, right? This is something we have to consider. Don't go looking around for longs while this behavior is intact. Bounces are going to be sell zones until they start making higher lows. And so we need one rotation that brings back a higher low. Manage your risk, and you're going to be better for it, right? So where's the buy zone? Way down here. Implied volatility moves, say, somewhere around 449 to 465 or so. That is this Globex opening range from March 31st, just a couple of days ago. People are just, I don't know, just don't get your knickers in a twist, folks. Just take a breath, relax, realize that the cooler heads in the investment game are the ones who stay around the longest and end up making the most money. All right, that's all for me. I'll see you on the streams. Don't forget, Midday Moneyball today, since I didn't have internet yesterday midday.